Okay, July 29th. Today we had Fed, obviously, at 2 p.m. and also 2:30. So let's see what we had before then. Before then, we were looking at this, pretty much. If you go on the daily, I just hide this. On the daily, you can see we had the inside day yesterday. Yeah, it was close, but it was an inside day. So obviously, we're gonna be looking to take out the low after having taken out the high. You can also see, I mean, if you just look at this on the daily, I mean, that's a lot of lower highs. So yeah, pretty clear bearish momentum. If you look on the hourly, yeah, looks pretty bearish. There is this decent level here. I mean, you can draw levels however you want. There's like 50 million different ways of drawing levels, but I would probably say like this, you know, there's a decent demand zone or break or whatever. There's some kind of support there. But yeah, that's pretty much it. And we can't stick through it, so yeah. So yeah, we're expecting maybe some kind of bounce, but overall, you know, bearish bias, obviously. Okay, so what do we get? Well, market opens here, probes lower, probes higher, chops around for a while, but then eventually we find lower prices. I think it's pretty fair to look for shorts here. I think that once we've tried lower and higher and we start to break lower, I think it's acceptable given the daily bias that we have. I think it's acceptable to look for the low. Certainly it worked here. That also reminds us quite a bit of yesterday and the day before that. We have this open drives lower. So we take out the lows. And that's nice, that's clean. And then I think it's perhaps the most important thing here is like you do have the low here, but it's also extremely close to this one and extremely close to this one. So I think it's fair probably to target this one, given that we have this overall bearish trend and it's getting tighter. Like if it breaks, it's probably gonna go lower. But that's kind of subjective, you know. So you could have targeted here or here. It's a solid 20 tick difference. But yeah. You also could have entered, of course, once we made these equal highs, we poke above the highs, close lower. At that point, you could also just go lower. Yeah, I think it's pretty obvious at that point, just based on the structure in the price action. And there's one more thing which I thought about a little bit. This is not really relevant to today, but I was thinking about how when you're taking a trade with the trend, you kind of want to see it go quite fast, so you might be able to get away with having a tighter stop. So I'm thinking like you might get away with having like a 30 tick stop or something, which could allow you a better risk to reward. Like you don't necessarily have to have it here because you want to see it go immediately. Kind of the same thing here. Like I don't know if you necessarily need your stop here. Maybe you could have it a little tighter. I'm not sure. But anyways, we go lower, we go lower, we go lower. No trades, no trades, no trades. Once we're past these levels, you know, once we've taken out this low, there really isn't much to like too much reason to look too short anymore. But what we do have is we do have this range, right? And so we range for a little bit and we deviate the low, we go higher. I was looking at this live and I took this because I figured it was just actually pretty clean. It's like, it's not that clean, but it's still like really good, if that makes sense. You have your breaker, you know, you try to push lower, you fail, you go higher, price retests. This was like a really clean entry. You could obviously enter higher, but this was a really clean entry. I was entering based on the volume profile. I was just looking at which level has the most volume. If you just look at it like this, you can see that there's this little spike here. And so I'm expecting price to sort of go through this low volume area and into the spike. And yeah, the target is obvious. You know, you have these equal highs here at the range midpoint. And that one did work, so that's nice. That's nice, that's nice. After that, not much. I'm certainly not confident enough to be shorting here, nor am I confident enough to be longing afterwards. And then it's pretty much just nothing until FOMC. Obviously, we're not trading FOMC, but you could potentially trade afterwards. I've always been curious about using news candles as a range. So this would be a range, pretty much this. And then maybe if you deviate the low, maybe you can go to the high. Maybe, I don't know. We trade higher aggressively. We trade into this hourly resistance here. There's some pretty clean resistance there. And I think it's totally unrealistic to say like, oh, I would have shorted here and traded it all the way down. Like that's obviously not gonna happen. I really think after such a big move, like I think I'm mostly going to be expecting chop, and I really don't think that I can see myself. Maybe later, but right now, just trying to be honest here, I just don't at all think that I could have actually caught a part of this move, because I think the bias is just far too unclear. Like we're trading aggressively higher into resistance. Like in my mind, that just means chop. So I think it's very unlikely that I would have been like, oh yeah, no, totally, like see this here, I would have shorted here, stop here, and target here. Like that's just not possible. So I really think after FOMC and before too, like for me there wasn't a trade here. Not today. But I legitimately think because of the daily bias being so obvious, because we have the inside bar, and because of the hourly looking the way it does, I think it's pretty easy to find a short here. I really think it is. And I also think that this long here at the range low to the range midpoint was pretty clean. So yeah, that's it for today.